Semiconductor stocks are hanging on a cliff, and if they break through this week, you're going to have much lower prices on all of these stocks. We'll talk about that. We'll give you some levels to look out for, not only on the broad-based ETFs, but the larger semiconductor companies as well. If you break through these levels, and we've seen the market's been moving very quickly over the past couple of weeks, you could have tremendously lower prices across the semiconductor industry. We'll look at all of these stocks technically here in a moment. I have been looking at charts of stocks for the last 25 years of my life, and this is a key moment. If you want to jump ahead, there are timestamps. We've got a lot of news to get to as well. Talk about Intel. They have a brand new CEO. We'll talk about some of the things that he brings to the table. Talk about the rumors that Taiwan Semiconductor potentially wants to have a tie-up, a joint venture with the company in its foundry unit. We'll take a look at the foundry unit, why it's in such deep and dire trouble. If the company can turn it around, we'll see what happens. We've got a big event coming from Nvidia next week as shares have slid by about 9%. We've got a Jensen Huang keynote. Can he talk up the stock? Can he talk up the industry? Will it turn things around? We'll discuss that. Amazon is making some major waves in terms of custom silicon, lining up several suppliers. Talk about the warrants that they bought into smaller companies, and then we'll talk about Marvell as well, making a little bit of news late in the week. What is going on, investors? Hopefully, you guys are doing well out there. We've got the Semiconductor Show for Sunday, March 16th. We're going to recap the news, and then we'll get to the technical charts, which are absolutely hanging on a cliff. We'll talk about that here in a moment. But Intel shares have actually performed well year to date, have bounced back from the lows that they made late last year, up about 20% year to date after the company announced a new CEO. When Pat Gelsinger got fired several months ago, this gentleman, Mr. Lip-Bu Tan, was rumored as potentially the guy that would step in, and that is certainly what happened. He previously served as the CEO of Cadence Design Systems from 2009 to 2021, where he doubled the revenue there, and I think I saw that shares of Cadence Design went up like 4,000% while he was there. He also served on the board of directors at Intel from 2022 to 2024, and he actually resigned. He actually left. A lot of times you see these people, they join the board of directors, and it's kind of a vanity thing. You get a little bit of stock, you get a little bit of money, but you show up like 4 times a year, you make some small decisions. A lot of board members are really crappy. They actually don't care about the company. This guy cared enough about the company that he disagreed with what was happening, and he actually left. And he actually is probably the reason why Pat Gelsinger actually ended up getting fired, as he was very open in showing his displeasure with the previous CEO and other board members over the size of the company's workforce, the number of employees, which they eventually had to right size and let go of a lot of them, the risk-averse culture, which basically had Intel relying on their x86 design, which has, been the cornerstone of central processing units for decades, and its lagging strategy as it relates to AI. And so he is coming in to turn a lot of that around. We'll talk about the foundry business. He expressed that that is going to be a key part of what they are going to do. Tan personally is going to invest $25 million of his own money into Intel. So he is going to put some skin in the game. That's always something that you want to see as well. Now, there was rumors earlier in the week that Taiwan Semiconductor is pitching a joint venture with Intel on its foundry business and manufacture chips for Nvidia, AMD, Broadcom, and others. Under the proposal, Taiwan Semiconductor would basically take over the foundry but have a minority stake, so less than a 50% stake in the business. Would probably take a little bit of heat off the financials, which we'll look at here in a minute, but also allow for the two companies to operate maybe somewhat independently. From the research and the analysis on this that I saw is that Taiwan Semiconductor has gone a certain way with their foundry business, Intel has kind of gone a different way, and obviously Taiwan Semiconductor has pulled well ahead of Intel in terms of its foundry business, its process nodes, basically all the technology as it relates to that. Now, can Intel clean some things up and catch up? That'll be interesting and remains to be seen. But the tie-up of the two companies, from what I was reading, is not nearly as simple as it may seem. It also will rely on if Mr. Tan here wants to actually do that and wants that to be part of the strategy. Some of it is actually based on financials, and this is something I've pointed out many times here on the channel. Sometimes you read analysis from the semiconductor industry and it's not from the investor perspective. It might have a political angle. It might have more of a technology, kind of a Silicon Valley type of viewpoint on these things. Just from a straight investor standpoint, the foundry business over at Intel has been a complete disaster. In the most recent quarter, it had $4.5 billion worth of revenue, which was a decline of about $5.2 billion from the previous year on a quarterly basis. Unfortunately, it's also wildly not profitable. Your foundry business lost $2.3 billion of operating income. In the most recent quarter last year, it was lost 1.3. So revenues have declined and the operating profits actually disintegrated even further, meaning losses mounted even faster. You look at it on a full year basis, paints the same story. Revenue declined and losses accelerated. In fact, they basically doubled year over year. So something has to change over at this company. Could the CEO introduce some new changes? I don't know. These financials are so bleak and so dire on the foundry business. I don't even think a change of leadership or even letting go employees is enough to slow the bleed down. Now, if you bring in Taiwan Semiconductor, would it be a quick U-turn in terms of the financials and the foundry business turning around? No, because again, the two companies are on a different track as it relates to actually manufacturing chips. All of this basically says that the two companies probably would be difficult to combine, but it would be interesting from a financial standpoint for Intel. And they've obviously got a lot of decisions to be made, but I think that this is, out of anybody that Intel could have chosen, is probably near the top of the list. The fact that he was on the board and he voluntarily resigned and he left was a very good sign that he actually cares about Intel and he has a plan that differed from the previous plan. And as we've outlined many times over many years, I haven't just jumped on the hating Intel bandwagon more recently. For years, I criticized this company. I was very similar to Tan. I criticized the company, criticized management, called for Pat Gelsinger to get fired for years. And that finally happened. And so I think this company is finally on the right track. I have also put my money where my mouth is. I've invested in Intel primarily because I felt that the downside risk was somewhat mitigated and that the upside potential of maybe getting rid of the foundry business, turning it around, partnering with Taiwan Semi, and certainly a hiring of a real CEO that had a real plan was all bullish for the stock. And as we've seen year to date, shares of Intel up about 20%. Now, shares of Nvidia, surprisingly, over the first 3.5 months of the year are actually down nearly 10%. And they're coming in to their big annual conference. Nvidia GTC conference kicks off this week. In fact, March 17th through the 21st. Nvidia CEO Jensen Huang will give a keynote on the 18th. How this keynote will be much different than the one that he gave back in CES back in January in Las Vegas, which I also attended. Probably be very similar. He's probably going to talk up a lot about the future. A lot of the stuff that I see around this event is more based on the robotics, obviously AI, but Nvidia, at least in terms of Jensen Huang's keynotes more recently, has been maybe more tailored towards robotics, more towards that because they view that as what is coming next. AI is here, and then robotics is next. And if robotics takes off in a major way, which I do believe that it will, then Nvidia will obviously benefit. This will be interesting. I am not going to attend this in person, but I have registered and I will be watching some of the events virtually, including this keynote from Jensen Huang, as we have a ticker countdown here. That will come very soon. Now, some other major news this week flew completely under the radar. I think what you have is Amazon.com is absolutely moving forward in custom silicon, potentially with a partnership with Broadcom. They also have a design unit that they've acquired several years ago. Could be something that they're shoring up there. But this company made some major steps in basically telegraphing that they've got some more custom silicon coming down the road. The first sign of that was a company called Fabrinet, which makes components for different types of semiconductors, including Nvidia's GPUs as well. Fabrinet issued some warrants to Amazon to buy up to nearly 382,000 shares at a strike price of $208 per share. Currently, Fabrinet trades at about $220, so you have somewhat of an invisible bid underneath the stock at about $208, which Amazon agreed to buy 382,000 shares. Typically, what Amazon does here is they enter into these agreements to buy a large number of shares with these suppliers, and then they make large orders with them. And so it allows them to place that large order, which could be beneficial for a stock, particularly one of Fabrinet's size, which is currently maybe about an $8 billion valuation. If Amazon really moves the needle over at this company, well, the shares will rise, and then the value of those warrants will maybe offset a little bit of that order that they made. Now, Amazon also made another investment in an even smaller company, $1.1 billion, Applied Optoelectronics, ticker symbol AAOI. The company announced that Amazon could buy up to 8 million shares. Shares of AAOI skyrocketed on this news. This is a very small company. The strike price was around $23.70 at the time. Shares were trading at like $15-16. So Amazon sees something extraordinary here, and they probably want to lock up AAOI in terms of an investment and also using some of their supplies and components in future semiconductor designs. Now, Marvell Technology stock has completely rolled over the past year. Shares are down now 37% year to date as you had a massive acceleration in the semiconductor industry. Obviously, Nvidia kind of leading the way, down 10%. If Nvidia is going to be down 10%, you have to understand the rest of these stocks that are on the fringe are going to be down even more. That is something we'll talk about when we get to the technical segment. The semiconductor business can rip higher, but it also can rip just as fast to the downside. You have to be comfortable with that as an investor. I read hundreds of comments and get hundreds of messages every month, and some of you just flat out can't handle it. And so you just have to keep that in mind with semiconductors. I know they've performed well over the past year or two, but if you have any type of market pullback, whether it's related to semiconductors or not, they are going to move in excess of what the broader markets are. And particularly as you move further down the stack to these, quote, smaller companies or middle tier companies, $60 billion valuation on Marvell, this thing has got absolutely hammered. So the company is going to file for an automatic mixed security shelf, which basically means that they may or may not raise money. Overall, this tends to be somewhat negative for shareholders depending on what Marvell is going to use the money for. Maybe they're going to raise money for an acquisition. They're going to test the deregulation and looser regulatory environment that everybody seems to think has been ushered in the Trump administration, although it has not really been tested. Maybe they are going to just shore up this balance sheet, which if you look over at Marvell, they're certainly not flush with cash, just $948 million of cash, long-term debt sitting about $4 billion. From an operating cash flow perspective, it looks just fine on a quarterly basis, printing about $500 million to the operating side. So I'm not really sure what they're overly concerned about. Maybe they're not concerned. Again, these mixed shelf offering could be a number of different things, could be put in place and never used, could be for an acquisition, could be for a number of different things. But again, this is not one of these like financially rich companies. Like when you look at an Nvidia or certainly like a Taiwan Semiconductor as well, they've got loads of cash so they can survive a downturn. Maybe Marvell getting out in front of things. Who knows what's happening there. Now, the semiconductor industry is absolutely teetering on an edge. We talked about this on previous shows where you're making these kind of pennant formations and you're going to break to the upside or to the downside. We did break to the downside. This is on its face not a good sign. Now, in the previous pennant, depending on how you want to draw it in, you did break to the downside. And then when that happens, the bull case, the people that are trying to send stocks higher, they try to defend there. And sometimes they succeed and you rip from 140 on the SOXX ETF all the way up to 265. So could that happen again? Could these shares get defended right here? Some of it makes a little bit of sense. You had some highs that you made back in 2021, almost correlated with the previous highs late in December of 2021. Both those areas serving as areas of support. You would not, absolutely not want to get significantly under about $180 per share on the ETF. If you're someone out there that can't watch your portfolio go down in value, and that is a good portion of retail investors. A lot of retail investors, the reason why they sell at the bottom and they panic sell at the bottom and they tend to buy at the tops is just a natural human emotion. To buy a stock and then watch it goes down is demoralizing and is devastating from a psychological perspective. If you can trick your brain and understand what's going on there and just understand as these things pull back, you actually get more excited. Yes, your shares that you already own are going further and further into the red, but you're getting more and more excited because it means that you can come in here and accumulate more shares, lower your cost average. So when the cycle resumes and the bull market begins again, these things will rally very, very hard, probably relatively quickly. If you can't convince your mind, which I would say is probably a very small percentage of investors, most people cannot watch their shares go down and they tend to panic sell as these things go lower. You want to set a stop loss in the SOXX in the $180 range. You get below that, this thing's probably retesting the longer term trend down here in the 150s, 160s. The SMH also broke technically. There is some smattering of support here in the the $200 range, but if you break that, it's probably the previous highs back in 2021 all the way down here into the 160s. So if you thought this 10% drop or so in the market was painful, I promise you, if it continues, you're going to have an even bigger drop in these things. SMH coming down here probably into the 160s, which would be another 30% plus drop in this thing. And that obviously would drag down stocks like Nvidia. Clear area of support forming on Nvidia right here at 102. It has been defended multiple times. And at the same time, you've not been able to get above the 150 range on these shares, basically staying range bound. Now, positive for Nvidia is really just to chop inside of this range for a while, have the market kind of do its thing, tariffs, political stuff, all that stuff kind of work itself out. And then at some point, you should resume to the upside. If that does not happen and you do break these levels, Nvidia shares, you want your stop loss probably in the $94, $95 range. If you break through $94, $95, the odds of you coming tremendously lower, I mean, we're probably talking into the 50s and 60s, is astronomically high. AMD has already actually shown you what has happened when you break from the highs and then you break trend. This thing is off 55% from its highs that it made just back in March of last year. So you really had a year where you've shaved off 55% on this one. So you are at some levels of support with AMD. You'll notice I have a green box on AMD, which is a buying box. Now, when you're at the top of these boxes, it doesn't mean if you want 10 shares of AMD, you just buy all 10 when you hit the green box. You should look at this in phases. As you move further down, you complete your position, you become a little bit more aggressive. Right now, you're still towards the top end of this. You're buying a couple of shares depending on your account size. Some of you Really larger accounts might be 10, 20, 30, 40, 50 shares at a time. Smaller accounts, you're buying 1 or 2 shares at a time. This one still has not shown any signs of wanting to reverse. Broadcom is still holding its longer-term trend that it's really been intact for about 2 years now. Business is being transformed a little bit. This company also is a software company. They have like a $40 billion software company that has like 90% gross margin. So they're a little bit different semiconductor company. They also sell semiconductor equipment and stuff into other industries not related to AI. Now, you break this level with Broadcom, levels much lower, probably back into the 130s, become in play. Intel is in its complete different universe because of the management shakeup and those types of things. You definitely have support down here in $18, $19. Notice that I have had a green box with Intel. You can go back to my other channel, any channel that I look at. When I say I've been looking at charts for 25 years of my life, I always put these green boxes on here, and I rarely actually change them. This green box has been in my Intel chart for a long time. When you got down here to $18, $19, it triggered a buy. And right now, that is still serving areas of support. As you move further up with Intel, you can peel off if you look at it as kind of a shorter term position. I'm still taking a wait and see approach with the new CEO. If he looks like he's got a really cool long-term vision and things start turning around financially, particularly really quickly, well, this stock could, rebound very, very rapidly, and we'll see what happens there. But that's in a slightly different position. Qualcomm is actually still looking really, really good. I don't know why I just changed this to a monthly view, but it gives you a sense of where Qualcomm is coming into a buying zone. This company has some other things going on fundamentally with Apple obviously taking away their business from Qualcomm, but at the same time, Apple is struggling in the country of China, and that is where Qualcomm could step up as they supply a lot of the handset makers that are domestic to the Chinese market. Interesting for Qualcomm. TSM has multiple long-term trends. This is absolutely one of these stocks where if you have this kind of meltdown in the economy, a meltdown in semiconductors, this would be right at the top of the list with the Nvidias, the Broadcoms, and TSM. In fact, those 3 companies would be right at the top of the list of what I would want to scoop. This stock is still, while it's pulled from its highs, is still very much extended. You have a very clean and clear area of consolidation that occurred back here in 2021. Right here between $100 and $140, you get back into that area with TSM. That is a great buying opportunity. ASML, I've been nibbling on shares of this one over the past several weeks, just very slowly building up a position in this one as you are at the bottom of a channel. NXP, I got stopped out of my trade, which was triggered, and then it went really dramatically higher and then pulled all the way back. As you're having this market turmoil, and a lot of it has less to do with semiconductors and it's more political and back and forth and those types of things. Some people like to trade those markets, totally respect people that do that. But when things are so completely out of your control and that Donald Trump could do a true social post or say something off the cuff, or Elon Musk could say something, like there's just so much stuff that can move the markets. I just like to take a step back. This one I'm not recommending from a trade perspective. NXP breaks down from this level. My goodness, you're probably coming back to this level here at 137. That would be an interesting area. ARM Holdings, we have to switch from a monthly back to like a daily view since it hasn't been public very long. Completely collapsing. We made a high back here in July. Now we've made a new lower set of high. That's not good technically. You also have this gap in the chart, which looks completely ugly down here in the $80 range. There's just simply not enough price action in this one to know where there's areas of support in here, but there's just not enough areas to really draw a clear indication. SMCI, also very similar to Intel, maybe a little bit like ARM Holding as well, kind of in its own universe because they had all those issues as it related to, reporting audited financials. There was a clear area of consolidation with the stock right here between $23 and $34. as you make your way back into that area, I wouldn't blame somebody that is comfortable with the company's financial situation and all those types of things to acquire shares in that level. If you're comfortable with SMCI, this is where you would accumulate in that area of consolidation. It coincides a little bit with the longer term trend, especially the longer it consolidates in there, the closer you are to what I believe is the longer term trend, which is down here. Just because I have a green box on shares, it's really for you. This is not for me. Low margin businesses like this, not for me. DELL is pulling back into an area where if you do want to buy shares, you've got your first buying opportunity on this one in like over a year. In fact, really almost 2 years, we're approaching a buying opportunity. Get back underneath probably $85 per share. Really good buying opportunity. You get a complete meltdown in the markets, back down south of $70. This one's very, very, very exciting. Micron, holding a very tight consolidation range for about 6 to 8 months now, between about 85 and 110. You need a break above 110. You don't break above 110, you're probably retesting areas down here at about $83. Lam Research, approaching a buying opportunity for the first time in a while. It's not a smoking hot buying opportunities for the pullbacks in this one, particularly south of $70. Very, very attractive. And Applied Materials, which I think upped its dividend, maybe did something with its buyback more recently, certainly did not help shares. This one actually is in an accumulation area anywhere south of the middle of these longer term trends. It can be an area of consolidation or area of accumulation. Further pullbacks down into the 130 range can be bought. You would not want to see this one break outside of its trend, probably here in the 115, 118 range. Wouldn't want to get below that because then it's, who knows where it's going to go. Semiconductor stocks, folks, are teetering on the brink. They're either going to find support here and move higher, probably make new higher highs. The intermediate trends will take back over if they're able to do that. If not, we are going to see these things break significantly lower. Make those decisions right now. Do you have stop losses in place? Do you want stop losses in place? Make that decision right now. Which of these companies are you going to buy if the trend reverses and goes much lower? Is it Nvidia? Is it TSM? Is it Broadcom? Is it AMD? Make that decision now, because I promise you, if the trend in the shorter term remains intact and these things move much lower, if you don't make the decision to buy Nvidia, buy Broadcom, buy TSM, you are not going to be able to pull the trigger as they move lower. The news flow is going to get worse. The economy is probably going to get worse. The recession word is going to be tossed around even more than it already is. It's going to be very difficult to buy these stocks as they retreat, because many of them will be off 50, 60, 70%, as we saw with Marvell. They'll be off huge from the highs that they made more recently, and the news flow will be negative. But if you make the plan and you plan it out, that is what a 1% investor do. That's what these videos are for. 1% investors don't panic, they plan. And if you have a plan, I promise you, things will be very, very good when the longer term trends take back over. Folks, that was a Semiconductor Show for Sunday, March 16th. Hopefully you guys enjoyed today's video. I'll be back again soon with more. Good luck with your investments.